Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
This is your overall journal of your portfolio. So what we're doing here is this is the third in the series. We have a journal of different trades to see how you're doing. You carry the data of your actual portfolio over to this. I like to do it about once every week. I'm guilty. I only do it about once every month because you really want to do it for each portfolio, one of these. And mine, I've simplified it where I know where my portfolio has to be by the end of the month, where I want it to be. I have enough money in there where I hit my goals and I don't have to really set much higher goals. So it is for where is your portfolio. And when you get over here to equity curve, that's what it's all about. You know, where is it at? And we'll get into this, because this one's not done all the way yet. Oh, hang on a second here. Look at that. This one's from 2019. Let's see how we did. Okay, let's change that. There we go. So on the equity curve, you can see how your portfolio is doing. This is what you want to see, right? Not only you wanted to beat the market, but you wanted to see it grow. So as you do all your trades, and I'm going to show you some trades in here that we'll get into in a little bit. We'll get into this, analyze what kind of trader you are after you get your portfolio built. But let me show you how to type these in. It's very simple. You could download this on that link I gave you. I love this one most of all because I can't keep track of all the trades I do, Noah. How about you? I mean, when you're doing it's really hard, right?
No,
So if you're doing 30, 40 trades a month, 50 trades a month, yeah, you can log them in. I'm sure you have time. When you're doing 30 to 50 trades a day, you get a bookkeeper, and then it comes down to this. Make sure you follow it on the portfolio. So I'm going to go in here and slowly look at my numbers here. This account net liquidity is what? 110,889. I put today's date on the left. Can you guys see both these screens here? Can you see my mouse too? Yeah, so 110. And if you're analytic or anal like me, I'll say that, I'll put the 889, okay? And if you're a real engineer, I'll put a 37 cents in there. How's that, guys? But yes, you can just round it to the 1,000. And a lot of times I won't even put these numbers in there unless I'm up or down by a couple thousand. Available funds. This gets everybody. What's available? Here's a little trick. You see your option buying power? That's usually what's available as far as cash. Margin will be double that. I don't count margin. I only count, because I never use margin. I only use what's available. So what's available here? 22,867. Okay, we'll put the 15 cents there. Yeah, no, I'm not going to. So how much do I have allocated to my portfolio right now? How much of my money is allocated? 79%. Now, depending on you, draw a line somewhere. Don't go over it. I don't like to go over 80%, even in a market like this. Why? The goal is not to use your entire portfolio. The goal is to see how much return you can make on the least amount of money, right? Just like an option. You want to double your money in your account. And yes, it's easier if you use all of it. But there's this comfort knowing that you don't have to be fully invested. You have a little room. And also, if you're an option trader, why do you not want it 100% invested if you're an option trader? Especially if you're doing credit spreads. Because how do you get out of a credit spread? Do you sell it again or do you buy it to close? You have to buy it back. And if you have no buying power up here in options, you can't buy it back. And you just sit there and watch that position go right to expiration, and it's at the mercy of the market. So you have to have option buying power in order to buy it back. Now, you might have a bunch of money tied up in margin, and that'll be down here. You can see it down here. I got $85,000 tied up in margin. But I can't use that. The broker's holding that as collateral. What you can do if you get down to where you don't have enough, sometimes, no, I'll have, like, let's say $2,000 buying power, and I'm trying to buy back $10,000 margin being held in an iron condor. And what, oh, sorry, you can't do that. You got to buy one contract at a time and close it down. Because, you have to free up your buying power is all you have. So you want to use a good amount of buffer here. Like I said, draw your line, have some in reserves so that you can buy back. And if you're short of stock, guess what you have to do? You have to buy to close. So you have to have buying power at all times. Oh, you learned the hard way, huh, Suki? Now, I learned the hard way a long time too. If you get stuck in that position, call the broker and say, hey, listen, real quickly, just get me out of that trade. They will lend you money to cover your margin back and forth in a split second. They'll charge you 1 day of interest probably, but who cares? It's called same day substitution, SDS. They will get you out of there if you call and ask them nicely, and they'll tell you not to do that again, and they'll tell you leave some money in the buying power. And by the way, guys, if you always have buying power, you will not get margin called. Okay? Jeff Crystal, Noah, he never goes over 50%. I think he's only at like 10% most of the time.
Well, that's a mistake I've made in the past too. I actually blown up a trading account trying to get too far to that and not having enough capital free to manage the portfolio to buy it back. And I was pretty new to trading at the time, and it was a very expensive mistake. And so definitely you don't want to get too close to the edge of your buying power. You want to give yourself, I'd say my general rule is never go beyond 70%.
Depending on the account size. If you only have a $2,000 account, it's tough. If you have a $1 million account, you're probably on portfolio margin at 7-1. You really shouldn't be using more than 200,000 to 300,000.
Right.
Plus you should be diversified in other products like physical gold, physical silver, real estate, bonds, annuities. You should be just spread out everywhere and just hedge like crazy. But when you get to that point, we'll talk about that advanced stuff. So how many trades do I got? Do you count, Noah, the different legs of your trade, or you just count the symbol?
I usually count just the symbols, but that might just be because I'm a short. I like to take shortcuts. So
I'm going to say 5 here. So let me put 5 in there. Bullish trades. Now this is where you have to look at it. If your delta is positive, isn't that bullish? Not always. Not always. My VIX is actually bearish. Okay, because it goes the opposite of the market. So you got to kind of glance and say, just because your delta is positive doesn't mean you're bullish. My VIX goes the opposite of the market. It's actually a hedge. So bullish trades, I have 4. And I have number lock. Okay, bearish trades, I have 1. Now wait a minute. My Russell, is it a condor? Because that would be neutral. No, it's just a bull put. So I don't have any neutrals. I don't have any delta neutral trades. So neutral trades, I have 0. And in a market like this, it's hard to find something neutral. So far, so good. Any questions on that? Okay, Nick's on beta weight. Okay, you're one step ahead of me. Let's go on that one. Beta weighted delta. All you do is you go look at your delta. Now, this is pretty easy. You just go over here, make sure you have on your little cogwheel, make sure you have delta and theta in here and trade price. Thinkorswim, as brilliant as they are, they don't put trade price, the price you traded in there. They just, think you don't need to know that. Put it right next to the quantity days trade price. Right next to it, the mark is today's price. And mark change is how much it's changed from yesterday's price. Then theta delta. Hit OK, and you're going to have it up here. The quantity, how many shares, contracts, whatever. The days to expiration. Notice it's 0 if it's a stock. Trade price is the price you paid or sold or got in at. Mark is the current price to close it. The change is how much it's changed since yesterday. For example, Nuggets up $1.75 from yesterday. The theta is how much you're making or losing on your options. Let me find an option trade here. Apple, I have long calls. It's negative theta. I'm losing $17 a day. You guys see that? Since I have 4 calls, it has a total delta of 260. Nugget has a delta of 210. And so it adds it all up for you. All you have to do is go down to the bottom here. Here's your total delta, beta weighted, and your theta.